Howdy folks, welcome to the Daily Coin. My name is Rory and today is Thursday, June the 28th, 2018, and I have the very distinct honor and great pleasure of welcoming back to the show someone that I highly respect, love his analysis, don't miss anything that he writes or anything that he has to say. And he is the founder and president of GoldMoney, and I'm speaking of James Turk. James, welcome back to the Daily Coin.
Thanks, Rory. It's always great to speak with you.
Well, I'm glad that you're here, and you have a fairly new adventure that we're going to talk about in just a moment. But first, I wanted to ask you, how do you see the next 3 to 5 years playing out for the metals, silver in particular?
Yeah, I've been beating the drum that silver particularly, I'm very bullish on, and here we are back again one more time to support at $16. It's, the 16 to 1650 is held silver now for many, many months, and given the tightness in the market, I think it's going to hold silver here again. But, the bigger picture is, why do you want to own gold and why do you want to own silver? Basically because, they are money with no counterparty risk. And when you look around the world today and see, the banking system, you see the potential frictions and things happening that suggest that there are a lot of problems developing. You really want to be, making sure that you own assets that don't have any counterparty risk. In other words, you want to own tangible assets, things that you own, things that you can control, and they're not based on someone else's promise or someone else's financial ability to deliver that purchasing power to you when you're ready to spend it. In other words, when you have that gold and silver and you need to sell it, you want to be able to sell it and spend it. And you want to protect your purchasing power, which is what gold and silver have done over thousands of years. That's why, they are money and will continue to be money. But like everything else in the world, assets become overvalued and they become undervalued. And I think one would argue that there are a lot of stocks in the stock market that are overvalued. But, my key point here, and I think the key thing that I'd like your listeners to take home with them, is that gold and silver are extremely undervalued. And what the market eventually does, it eventually corrects. It goes back to fair value and maybe even overvalue at some point in time in the future. But, that means that to get fair value in gold and silver, the prices of gold and silver are going to have to go much higher from here.
I think that they're going to. I've been saying for over a year that the time frame 2021 to 2023 that we're going to achieve levels that were back in 2010, 2011, and that neither gold nor silver are going to look back ever again from there. And I hope that our world hasn't fallen completely apart, but who knows? But that's what I see. And you're a lot smarter than I am and have been doing this a lot longer than I have.
Well, I've been doing it longer, but I wouldn't say I'm any smarter. I know you've got a good head on your shoulders, and that's why I very much respect you and enjoy speaking with you. And, the point you were making about, silver in particular, when we started chatting about this, there are subtle things that are happening that to me suggest, again, we're very, very close. You can see the way the market trades on a day-to-day basis. There's a good demand for physical metal.
Yes.
And it's hard for a large order to be placed and be filled right away. It takes a while for large orders to be filled when you're buying physical metal. But there are other things that people can look at. For example, the gold-silver ratio. How many ounces of silver it takes to equal 1 ounce of gold. We'd been up in the 80 area for a good part of this year, as high as 82. And we've been slowly moving down. We're in the 77 ounces of silver equal 1 ounce of gold. And that's a very positive development because in precious metal bull markets, silver always outperforms to the upside. In other words, both metals will rise, but silver rises faster, which causes the gold-silver ratio to decline. So while it costs 77 ounces of silver now to buy 1 ounce of gold, 2-3 years down the road, I would expect it to be, maybe 40 or 30 ounces of silver to buy 1 ounce of gold. So silver is outperforming gold in a precious metals bull market. And that's what we're starting to see. It's still early days, but, it looks like, they're starting to, silver is starting to outperform. So yeah, there are some signs out there, and the fact that we are down in support again suggests that we're probably going to turn higher here in the not too distant future.
I would agree. I couldn't agree more. I mean, I think that we're going to start to see some serious movement, and we're going to get into that in just a minute because there's some things that are happening that most people are aware of, but I want to get your take on what it all means. But before we get into that, James, I wanted to ask you about what's new with GoldMoney. And I know that you've got, I believe it's called Lend, Borrow, Trust. And if you would, just tell us what's going on with this.
Yeah, it was an okay year that we completed. We just reported our annual results to the Toronto Stock Exchange, where we're publicly listed. And it's our first year in which we reported a profit as a publicly listed company. It took a couple of years of working out, bringing the two companies together into the new company that we call GoldMoney Incorporated. So we're very, very pleased with those results. We're starting to lay the seeds, or have been laying the seeds, in a whole bunch of different areas. One area that we've been focusing on is the development of cryptocurrencies. This may not be everybody's cup of tea, and to be honest, Rory, from back in 2008 when they first started becoming known, over those initial first few years, I've sort of flip-flopped back and forth as to whether cryptocurrencies had a viable future or didn't. But around 2012 or so, or 2011, probably 2012, I became convinced that the technology that cryptocurrencies offered really, do have something. They do bring something to the table, and they do have a future. But the way to explain it from a precious metals perspective, I like to use an explanation that my colleague Roy Sabag, who's the chairman and CEO of GoldMoney, uses to explain it. He says that cryptocurrencies will make central bankers wish they were on a gold standard, and I think there's a lot of truth to that, because what cryptocurrencies can do is they can impose a form of discipline on the management of national currencies, and that's why cryptocurrencies has attracted a lot of interest. People see it as an escape route to preserve some of their purchasing power, to move it out of national currencies and move it into cryptocurrency. So I think they have a future, and if they do, I think GoldMoney will be there. It's already become an important small part of our business, but I think it'll become more important in the future. And the other thing, GoldMoney has this working relationship with a company I started called Lend and Borrow Trust Company. GoldMoney is now an investor in it as well. And what that enables people to do is you can borrow against your gold and silver. For example, if you have some expenses you want to take care of, if you want to buy a house or whatever it is, you can use your gold and silver and borrow against it. The advantage is that you still have your gold and silver, so you don't have to sell it and incur tax consequences or anything like that. But you still turn it into a monetary asset by just borrowing it against it as a form of collateral. The advantage to lenders is that if you're lending to someone who's using gold and silver to collateralize their loan, you've taken money out of the banking system, so you don't have bank counterparty risk. You're earning a fair rate of interest, one that's determined by market forces, not by central banks. And your loan, the amount of money that you advance to the borrower, is secured by the borrower's gold and silver. So if the borrower misses an interest payment or a principal repayment, what we do in Lend and Borrow Trust as the middleman of the transaction is we sell some of the borrower's gold and silver to repay the lender. So both the borrower and the lender have clear advantages through Lend and Borrow Trust, and it's working fairly well. We've booked about in U.S. dollar terms approximately $15-16 million total
Wow.
loans so far. And we've only been going a short period of time, but both borrowers and lenders are finding it attractive. So what we're doing at GoldMoney is we're continuing to grow and expand. And our mission remains the same, though. Which we've spoken before in the past. It's basically to make gold and silver available to anyone around the world who wants to own gold or silver, and also to make gold and silver much more useful to individuals.
That's the
So
thing.
that's our mission.
Yeah, and that's the thing, is making it useful, because the bankers, they don't care how many gold coins or gold bars or silver coins or silver bars that you have in your vault. But when it starts getting out, moving around, like what you're talking about with the Lend and Borrow Trust, now that starts getting people's attention, because now it's out there creating creating different economic activity that isn't beholden to dollars or euros or yen or whatever currency that the bankers own. So that's when it starts getting their attention, and that's been my argument for a long time, that they don't care about gold and silver that's sitting in your vault. But when it gets out into the wild, like what you're talking about, now we got a problem.
Yes, I understand completely.
So I wanted to ask you about your recent King World News interview, and you reiterated that central banks would either be forced back onto a gold standard, or the system would, in essence, change so much that the central banks would willingly move back to a gold standard. And as you know, James, Peter Boehringer, the architect of the German repatriation movement, stated that there were close to 21 countries that were either discussing gold as money, gold repatriation, or some form of very high level discussions of gold. And gold has been repatriated by several countries now from U.S. vaults, returning to Venezuela, the Netherlands, Germany, and most recently Turkey. Is this, in your opinion, countries preparing for a change in the monetary system, or is it something else at play with these moves?
No, I think it is countries preparing for a monetary change. And there are two other examples that I would add to the ones you provided. Russia and China, two of the largest gold producers in the world, continue to add to their gold reserves as well. So I think there is a sense that people, central bankers and governments, recognize that a change is coming in terms of the way the international monetary system operates, and whether that catalyst for change is going to be President Trump trying to achieve fair trade around the world, or some kind of geopolitical event. One can only guess at this moment in time, but the trend is clearly that things are changing. The institutions of the post-World War environment are being called into question. The EU is being called into question. The policies that they've been following are being called into question. And it's also being reflected in how people are voting around the world.
Yes.
Not just in the United States, but also in Europe. There are a lot of Trump-like politicians getting elected, not just in lower levels of government, but some of the prime ministers in some of the European countries as well. So things are definitely changing. That means it's going to have an impact on the monetary system, because when change occurs, that means uncertainty. And what uncertainty means, you want to reduce risk wherever possible. And the best way to reduce risk is to take that gold that you've got stored. If you're Germany and you've got gold stored in the Federal Reserve, you take that gold in the Federal Reserve and return it back to Germany. And that's, in fact, exactly what's happening.
Yeah, and to me, it's been pointed out by someone else that I respect, but I don't agree with their view of repatriation. And their view is that repatriation is not important because it doesn't impact the overall gold market. It's just moving from one vault to another. But my argument is that it's maybe more important because it shows a lack of trust, and or a question of trust is what comes to the table when you start talking about repatriation. I mean, am I out of balance there, or
No,
how do you see that?
yeah, I agree with you 100%. And it actually brings up a very good point, because if you go back and look at monetary history, we get these what I call debt cycles. Banks lend too much, and eventually they get overextended, and you have a collapse. We typically call it, the boom and the bust, the economic boom and the economic bust, or a collapse. Now, normally these things occur every 5 years, sometimes 3 years, sometimes 7 years. Well, it's been 10 years since the last bust. That means we're long overdue. And when you look at the banking situation in Italy, if you look at the stock chart of things like Deutsche Bank, and if you look at a fund here, a fund in the United States called the XLF. It's basically a fund of a variety of different financial stocks and banks. It did not exceed its 2007 high. That's showing inherent weakness in the banking system, and because the bank stocks just haven't performed as well as the rest of the stock market. And the stock market always looks to the future. And what I think the stock market is looking here is that even though the banks have been generating reasonably good cash flow, they're looking at balance sheets and recognizing that the banks are going to be taking a lot of bad losses, like they've done many times in the past. Like they did in 2008, like they did back in 2001, like they did back in the 1997 with the Russian collapse, like they did in 1991 during the savings and loans collapse. And I could keep going back in history to show that these things repeat. Well, I think we're about ready to have a repetition again. And if that repetition occurs, you don't want to have financial assets. You want to have tangible assets, which brings me back again to physical gold and physical silver.
Exactly. And last question, James.
Yeah.
And it's with Russia recently dumping 50% of their U.S. treasuries. And for the record, it wasn't a real significant volume. However, the gesture itself was huge, just like the repatriation we were just discussing. And Russia also recently asked their Russian companies to move out of the SWIFT system and into the Russian alternative payment system that is tied directly to the Chinese alternative to the SWIFT system. Would you say Russia is really the canary in the coal mine for some type of change in the global monetary system? And is this part of the overall nonstop attacks by Western corporate media against Russia?
Well, I think this was a wake-up call for the West. And it's not too surprising to me that President Trump has asked for a summit meeting with Mr. Putin, which I understand is now going to be held in Helsinki in the not too distant future. To see Russia sell the amount of treasury bonds that they sold, and to see Russia continuing to build up its foreign exchange reserves, clearly they were giving an outright signal, to the West and to the United States in particular, that enough is enough.
Exactly.
I mean, in the winter they threatened, closing down natural gas pipelines and all of that stuff, but that has a potential negative feedback, because people go cold if they don't get the natural gas. So they continue to supply natural gas to Western Europe during a very cold winter. So this is a different kind of signal. People don't have cold homes when you sell U.S. government bonds.
Right.
So, basically the Russians, I think, have given a signal, and the U.S. has been responding. How that's going to play itself out, I don't know. Maybe it'll be worked out and Russia will start buying U.S. government debt again. But maybe they won't. And maybe China's going to start selling U.S. government debt. They haven't been buying it. They're just basically holding what they have. And we know that the Federal Reserve has been selling U.S. government debt because they're trying to reduce the size of its balance sheet. So that means interest rates are going to go up. And that in turn has going to have a negative impact on the banking system and on the economy. And if we go back to the 1970s as an example, throughout that decade, interest rates rose. And throughout that decade, the gold price rose. And the reason is because the interest rates were not rising fast enough to offset the rate of inflation. And I think that's something that we should be focusing on here, that the rate of inflation, I think, is going to continue to move up. It's already above the Federal Reserve's target rate. I think it's going to get worse as we move toward the end of this year and into next year.
Well,
crude oil is back over $70 a barrel again, Rory. Not too long ago it was half that price.
Right, and if you listen to the interview that Greg Hunter just did with John Williams of Shadow Stats, according to John Williams, inflation is right around 10%, somewhere between 9.5% and 10% right now. So interest rates are going to have to come up quite significantly from where they're at to meet the reality. Now, what we're told is somewhere around 2% is what the inflation rate is. Anybody that eats or drives a car or heats or cools their home knows that that's just not true. That nothing could be further from the truth than that. So if what you're saying, James, is that what happened in the 70s with the inflation rate not being able to catch up to, or the interest rates not being able to catch up to the inflation rate, and I believe inflation or the interest rate topped out at like 21%. I mean, where's it going to be when this thing blows?
Yeah, but the problem this time around is that there's so much more debt in the world, in the country,
right,
in corporations, that you can't possibly see interest rates go up that high because there's not enough wealth being generated by the economy to service that level of debt. Remember, back in the 1970s, the U.S. was the largest creditor nation in the world.
right.
Now we're the largest debtor nation in the universe. And it doesn't look like the debt is going to get any smaller. It looks like it's going to get bigger. And the question is, well, if interest rates rise, how can the U.S. government generate enough revenue to repay the interest? And the answer is they can't.
Right.
And it's not the first government to get into that problem. It happens time and again. And most recently, it happened in Venezuela. And you're seeing what the consequences of that are.
Man, that is a horrific scenario they have unfolding down there. It is just and I've been following that for the past almost 6 years as far as the way that whole thing has been unfolding. It's unbelievable. But we've been speaking with James Turk. He's the founder, president, GoldMoney. James, tell them how they can get in touch with you and how they can get in touch with Lend and Borrow Trust.
Yeah, GoldMoney, you can find us at goldmoney.com. Lend and Borrow Trust, it's just as the name applies, lendborrowtrust.com. And you can also find me on Twitter at FGMR. That's the initial stand for Free Gold Money Report, at FGMR on Twitter.
All right. And all of those links will be in the description box below. James, I certainly appreciate all your time and your great wisdom. Appreciate you sharing with me and my audience, and I look forward to speaking with you in the not too distant future.
Happy to do that again, Roy. Thank you very much.